Mm, What's going on, everybody? Everybody able to hear me okay? Let me know in the chat if you can hear. Okay, cool. Thanks. God, I couldn't figure out how to get the headphones on the damn computer. Forever, so I'm doing well. Good to see you. Welcome in, everybody. We're gonna get going in just a couple of minutes. I've had some bad luck recently, Husky. I was sick a couple weeks ago, and I got sick again. Well, the last time I had food, and after a break, but I think I'm good now. I think hopefully, I'm enjoying the episode. Well, oh, how about now? I might need to go get this computer, and the Bluetooth has been pretty rough. So let me grab. I'm really. Oh, I do. I have a microphone. All right. Can anybody
All right. Can everybody hear me now? Cool. Okay. I just joined from my phone and did it that way. I just got this new computer because my old computer broke and something's up with the Bluetooth on it. So I don't know why the Bluetooth doesn't work, but I got to figure that out. Maybe, I don't know. I got to figure something out with that. But either way, sorry. I apologize for the delay. I guess I didn't realize that my mic might not be working when I try to start this lecture. Sorry about that, everybody. Let me send out one more message letting everybody know we're going to get started, and then we are going to get right into it. So give me 1 second to send another message. Live lecture starting now. All right, let me get this out. Cool. All right, good to go. Sorry for the delays, everybody. Let's get this one going. Welcome into the discussion for the evening, everybody. Appreciate you guys' time tonight. Tonight, we're going to be discussing in depth regarding price action and how to really think, I'll call it on a deeper level about price action. So, you guys may not understand exactly what I'm referring to when I use the term price action. So, I'm going to define that a little bit to start the lecture out. And then we're really going to focus on the charts, focus on some specific examples, and really talk about this is going to be kind of a continuation of the advanced technical analysis lecture that I tried to start 2 weeks ago and had to have that early ending that I know Husky remembers. So we should be a fun class tonight. Going to be a lot of focus on the charts here. As a reminder, those of you who have been in the lectures over the past almost 2 months now, you would know that we have been going through with the beginner's course series. And the beginner's course series is a 12 week course that I've kind of put together where we start from really nothing, kind of build up from the basics of the market all the way to some more advanced technical analysis and even a little bit of fundamental analysis concepts. So a lot to cover in this series as a whole. So if you haven't checked out those earlier lectures, highly recommend you do so. They're all located in the recorded lecture tab. So if you get the free time to go take a look at those, definitely couldn't recommend those anymore. But that said, that's enough talking. We're already late to the class tonight. Let's get right into it. Talk a little bit about price action. The kind of main aspects of price action, the two kind of fundamental pieces of it. This is a real simple PowerPoint lecture. I got one slide here. This is the only one. So let's talk about the two main, most important pieces of price action. First one, as everybody could probably imagine, it's price, right? We'll talk about what that looks like on the charts. And secondly, it is volume. Ultimately, these are the only two things that you need to understand at a high level in order to really get your skills of analyzing financial markets at a different level. So many people are so focused on things like patterns and candlesticks when at its core, right, the market is simply a reflection of price and volume in every tradable instrument possible. And if we can get a more deeper level understanding of these two aspects of every chart and understand how they relate to each other, we're really going to be in a much better spot. So that's what the focus of this lecture is going to be on. I want to actually start by moving directly into the charts, if I can get there. I want to start by moving into the charts here. And I want to start off with a couple examples. Let's first focus on Amazon. So Amazon is a name I've been following for a little while. I think a lot of us have probably been paying attention to this chart. And I'm going to just simplify things up a little bit. So we got just a few lines on here and the EMAs. So as I mentioned, the two aspects of price action analysis are really taking a look at price and volume. Volume, I'll start there because it's a bit simpler. Volume is a real simple kind of, I'll call it, piece of information to think about, right? You don't really need to get too complex when taking a look at volume. It's just very important to understand the patterns here. And we've covered this in lectures before. And I want to start off by just adding a quick volume study here. Let's see, I don't remember what I called it, high volume. I want to add a quick volume study here. And you can see now that the volume at the bottom of the chart here, some of these bars are highlighted yellow. And this is a study that I wrote myself. Essentially what this represents is when volume, or this study highlights bars yellow when volume is 3 standard deviations above the average. And it's kind of interesting to see where these periods of high volume have occurred in the past. And I'm going to try and just zoom in on a subset of this segment here. And I'm even going to remove our EMAs just for a little bit, just to make it expressly clear what we're referring to here. So let's start here, right? Let's just highlight these sections of high volume in the past. We have here, right around here, right around here, all through this area here, here on this specific week, here. I'm not going to highlight every single one. I'm just going to get a good group of them. We'll just focus in on this area for now. So I'm going to start off by kind of sending out a question to all of you, which is, what is one thing that you notice every time we see this high volume come in, right? For the most part, right? Maybe it's not necessarily perfect, but what's something that seems to be commonly associated with this very uniquely high volume, right? As I mentioned, this is volume that is above the 200, it's 3 standard deviations above the 200 period moving average. And just to kind of show you what that looks like, let's reflect that really quick. Standard, this is a chart that I used to bring up all the time. Normal distribution. So let's take a quick step back before I ask the question, just to show you how rare the kind of yellow highlights that we're looking at are. This is going to bring you back to your high school statistics class or college statistics class. Essentially, this midline here is representative of the average, and this is a standard bell curve. So some of you probably have heard your statistics teacher say that in the past. This bell curve is representative of a normally distributed set of data, right? So over a period of time, generally speaking, we see data distribute in this manner, right? Some people are kind of centered on the average, and there's some data points that are way above average, some data points that are way below average. Like you could think of this as like maybe IQ, right? Maybe most people are 100 IQ, but some people are 160, some people are 60, like Mike. I'm just kidding. That was really mean. I don't mean that if Mike's in here. But anyway, midline here is the average. This section here, that's the kind of lightest yellow, represents a good chunk of the data, almost 2/3 of all data. And as we move to the tail ends of this normal distribution, we see less and less probability of data being in that segment. And essentially, once we get above the 3rd standard deviation, so this is 1, 2, 3 standard deviations from the mean, that represents about 0.15% of all data is above 3 standard deviations from the mean, right? Which means it's pretty rare to see something like that, right? About 0.15% of all data is 3 standard deviations above, and the other 0.15 is 3 standard deviations below. So what we're looking at here is data in this section of the normal distribution. Very, very small subset of all volume. So now that we have that background, which I probably should have given before I asked the question, now that we see this, right, what's one thing that's really interesting about every time we see this high volume, right? What is one thing that really stands out every time we see this high volume? What is the price doing every time we see high volume? Really, you could say 2 things. We have one answer from Al Brooks already, but what else? I mean, Al Brooks said pivots. I agree. What else? What are other ways to define what we see every time we get this high volume? Large candles. Yeah, I think that's a decent answer. That's a common thing to see with high volume. Yeah. Any other answers? Direction change. Nice. Yeah, reversal. I agree. Yeah, very common to see reversals. Buyers, price movement. Yeah, great answers. Great answers, everybody. Yeah, absolutely. Big movement. Yeah, so 100% agree with a lot of what you said there. And I want to just refine some of the ideas you put in the chat. So I want to first just focus on this specific example right here, because I think this candle right here is a pretty good one to start by taking a look at. So we have this real nice looking hammer candle with our yellow volume indicating that it's high above the average, right? High above the average here. So we know that on this weekly candle, we got above average volume. When we see that above average volume, generally speaking, when we see that above average volume, there's only one thing that can be happening. Big money is altering their positioning in any given equity. It could be for the buy side, it could be for the sell side. What that means is that when we see that high volume, big money, institutional investors can't hide what they're doing, right? It's impossible for them to obfuscate their buys and sells, right? They can do what they can to hide it in different exchanges, different dark pools, etc. But ultimately, that volume is reflected on the charts, and we can see when people are truly buying in mass and when people are truly selling in mass. And this is a really important concept to take with you. If you don't remember anything throughout the rest of this lecture, just note that paying attention to volume alone gives you a really unique window inside what's actually going on within a stock. It really tells you who's buying and who's selling, right? On these low kind of volume days or lower than average volume weeks, not much is going on, right? There's not much big changes in institutional positioning. However, when we see these large volume moves, one direction or the other, we know that there's massive changes in institutional positioning. And ultimately, the market is moved by these changes in institutional positioning, right? Smart money, which would be these people buying the tops and selling the bottoms, ultimately are always going to be buying the tops and sell the bottoms because they control where the bottoms and tops are. They ultimately have the amount of funds to throw into any given stock to make a bottom form, because once that buying pressure outweighs the selling pressure, that's how you form a bottom. Ultimately, though, not too important to focus on that, but the fundamentals of why stocks move the way they do all comes down to buyers and sellers and an imbalance between those two parties. So again, right, just to highlight a couple of these really unique single big volume instances, right? We have here on this earnings report, we have here on this random week, here, these 3 weeks, here, ramping up higher and higher, here, right? Every time we see this high volume, it should be giving us a reason to pay attention, especially when we see that high volume come in as we break a massively important level. Like, for example, this level right here back in 2017 on Amazon. We've sat below this level for the greater part of half a year, right? This is the $52 level. We could just call it 50, right? Round down that psychological level seems more logical. So we'll just call it stock was stuck right around this $50 level for the better part of almost 6 months. All of a sudden, we break that 50 level on incredibly high volume, right? About double the average here, which means to us that a lot of institutional buyers are participating in this move higher. And while it doesn't always necessarily make sense to get long at the top of this bar, it gives you a reason, a concrete reason to say something has fundamentally changed with what is going on in this stock. After you see a move such as this, there should be two things that you're looking at. Number one, volume, right? Much higher than the average. And number two, price, right? We're seeing a massive engulfing bar closing above every single prior resistance level, right? This is a 6-month range, and this single candle took us through the highs of every part of this range. So this is an example of an incredibly strong volume-backed breakout. And if we zoom out to see what happened after that move, that was here. We never came back to visit 50. And you look at another example of this, right? A lot of high volume through this COVID period, right? That's understandable, right? This isn't something that's necessarily an anomaly. A lot of the market experienced high volume throughout this period. What is an anomaly, though, is this. As we break these prior swing highs on incredibly high volume again. And notice, it took us a long time to come back and revisit that level, but when we did, those same buyers were still there waiting, right? While we didn't get an instant bounce off this level, those same buyers were still waiting at the exact same spot. Same idea at the COVID lows, right? We had high volume buyers at these COVID lows. There's no coincidence. Those same buyers were once again present in the stock when we revisited that same spot. And even here, I guess there wasn't any significant volume here. There was just this red week that was the rejection. So nothing too crazy as we made this move higher. So I can't point to any specific examples there. How do you get this volume study? I will try my best to share it with you now. I wrote it myself, so hopefully there's no problems with it. Yeah, what I'll do is just, at least I think I wrote this myself. I think I stole some parts of it, to be honest. But anyway, let me try and share it. Yeah, it says any item shared will be available the following day. You should have imported this item. So I'm going to try and share it. I'll send the link, and hopefully it works for everybody. Go ahead and try that link. I just put it in the chat. See if it works now. If not, try it again tomorrow. But I've had a lot of trouble recently with getting studies to share from my computer. For some reason, it just doesn't really work. I'm not sure why. But anyway, give that a shot and see what happens. So let me know in the chat if you guys want to try and import that, and yeah, give me an update there. But anyway, the big idea is that price and volume are incredibly interconnected, and paying attention to one without the other is effectively doing yourself a disservice. And we've had all these lectures on patterns and trends and candlesticks. And while all of those concepts are fundamentally important to understanding markets and understanding technical analysis, arguably nothing is more important than understanding price and understanding volume and how the two correlate. I'd argue that every single one of the greatest trade ideas effectively starts with some kind of high volume and price breaking or testing some kind of key level. Oh, it worked for you, Al Brooks. Really? That's the first time that that's actually worked in a long time. Anyway, the reason Amazon's been on my mind is because of the fact that we've had multiple high volume events in recent history that have proven to be significant pivots in the stock. So I want to highlight and kind of talk through some of these. A lot of these concepts that I'm going to talk about right now are reflected, or I'll just say things that I learned from a book called Volume Price Analysis. I'll bring it up really quick if you're interested. In no way is this an advertisement or anything like that. It's just a book that I liked and personally found value in. Let me pull it up really quick. It's by a great author, Anna Cooling, I think is how you say her last name. I really like it. I think it's a great kind of system to be paying attention to and understanding. Here's the book. It's cheap, $24. Like I said, I really liked it, found a lot of value in it, and personally think this and one other book that I'll talk about later have really pretty much fully defined my trading system. And yeah, a lot of value in that book. $24. I like reading books a lot more than reading things online. But if you want and you don't want to pay for the book, I'm sure it's available for free somewhere. But it's $24. I mean, it's pretty cheap and worth it. Anyway, reason I mentioned that is because a lot of the concepts that I'm going to cover tonight are covered in that book in, I'd like to think, a little bit less of a better way than I'm going to cover them tonight. I think some of them could be covered a bit more simply, but let's start by talking about breaking down this example on Amazon. And I want to focus on a few different high volume spots that I'm going to highlight here, 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 and here. So this is a large kind of example or a large set of really, really nice examples that I want to talk through. Can I start buy and sell volume again? Yeah, let me post that in. And that's actually not the buy and sell volume, Rudy, just so you know. It's just the high volume script is all it is. I don't use that buy and sell volume script anymore. I really only use this high volume one, which just to show you what it looks like on the 5-minute, I've found it to be really nice. I use the same 200 period and I have to turn off pre-market, but it works really, really nicely, especially for intraday. Just to give you a quick example of how it worked today. Here was some high volume as we broke the highs, right? That's obviously very bullish, really easy long there. Here was some high volume as we weren't breaking highs and nearing a top, which reason to kind of slow down, take some profits. Here, another example of high volume at a top, right? Good reason to take some profits. Here was some high volume as we started breaking away from those highs. So anyway, I really like the study. I think it's, I like it. But anyway, yes, works on any time frame. Excuse me really quick. I got to. All right. So let's talk through every single one of these examples on Amazon and talk about what's going on here. Before I go into them, does anybody have any questions, comments, concerns, any confusion? It's going to start to get a little bit more complicated. This is a lecture that's closer to the end of the beginner's course series. And as I've been warning everybody, it only gets harder. So yeah, any questions, concerns before I keep going? Everybody feeling good and excited to hear about some volume price analysis? All right. I know Husky's fired up. This is what he was expecting to get, but I got poisoned. All right. Cool. Let's keep going. So talking through these first examples, right? One thing to note before I get into too much detail, and I'm going to write this on the chart, is volume equals effort and price equals result. This is the fundamental concept behind volume price analysis or price action analysis. This should be a saying that is ingrained into your mind, especially as we talk through these examples. Volume is the effort, price is the result. And thinking through another analogy, right? Imagine you push the gas pedal in your car to the floor, right? You're matted, and your car is only doing 20 miles an hour and it's not accelerating. So your car is putting in a whole lot of effort, or at least you're putting in a whole lot of effort to get your car to go, but it's not going anywhere, right? So that's really high effort, very low result. The opposite to that analogy is if you're driving a supercar or maybe even a Tesla, where you barely got to put the pedal down and you accelerate very rapidly. So you're putting in low effort and you're getting a big result. So kind of two different ways to think about this. So in the market, again, the volume is the effort, the price is the result. So let's talk about this. Here we see sellers beginning to put in a lot of effort, right? An increasing amount of effort to drive price lower as we move into an earnings report. Now, it's important to note that anytime we go into an earnings report, it's a binary event, right? It either goes well or it doesn't. It's simple, right? There's not necessarily any way or system to predict that. However, important to note that this was into an earnings report. But let's zoom in and focus in on this specific example really quick. Notice here, as price moved lower, or as price moved, I'll say as volume moved higher, so more sellers stepping into the marketplace, price didn't move as low. So for example, from this day to this day, open to close, price dropped 5.5%. That's a massive drop, right? 5.5% drop. From this day's close to this day's close, price dropped 1.5%. But the amount of volume that it took to drop price 5.5% was lower than the amount of volume it took to drop price 1.5%, right? Which is illustrated here, right? On this day, we dropped 5.5%. On this day, we dropped another 1.5%. This is what it's called an anomaly, right? This is something weird and something to be paying attention to. Buyers or sellers are putting more effort to drive prices lower in the marketplace, but price isn't going lower proportionally, right? So let's write this example down. Day one, effort equals, I'll write down the numbers here. Day one effort equals 75 million. Day two effort equals 100 million. Let's write this down. Day one effort, 75 mil shares traded. Day two effort equals 100 mil shares traded. Okay. And day one result equals minus 5.5%. Day two result equals minus 1.5%. And this is an example of an anomaly, right? The amount of shares traded has increased on a day that sellers are supposed to be in control, right? It's a bear bar. Open is higher than the close. However, the result that we got is different. Bringing this back to the analogy of a vehicle, right? Imagine you're driving your car, the pedals to the floor, and you get a big increase in speed. The next day, the pedals to the floor and you add some nitrous and you're running racing fuel, right? So you're trying even harder, but your car doesn't speed up nearly as much as the day before. That's pretty weird, right? Something has changed, which is exactly what was happening here, right? Again, going into an earnings report, it's a binary event, right? This isn't a signal necessarily on its own to say, oh, you should have been long into the earnings report. No, anybody says that, that's crazy, right? This could have gone either way. However, after the report, when you see price gap up over these previous two bars and hold that gap open the next multiple days and break these swing highs here, that should be a signal for you to say, hey, we had a lot of sellers try and move price lower here. Even more buyers stepped in after the earnings report, and then there was follow through higher. This is no longer looking bearish anymore. This structure has fundamentally changed here, right? Something is seriously different. We had sellers in control, moving price lower, and all of a sudden, buyers put in more effort than the sellers had, right? Day three is 125 million volume. Their result was a 7% increase, right? And then they had follow through higher, broke the swing highs, which this should be a signal to us, right? This doesn't necessarily mean, okay, we should have been long on the earnings date. No, that's not necessarily a good idea. This doesn't even necessarily mean we should have been long the day after earnings, right? That's also not necessarily always practical. However, once we see price breaking these swing highs, there's certainly not a damn reason to be going short anymore. There's just not, right? The structure of price has fundamentally changed. You had buyers putting in or sellers, putting in a last-ditch effort to try and move price lower on increasing volume. They got nowhere. Buyers stepped in after the earnings report, gapped price significantly higher above all of the work that sellers had done. One day of buying erased 2 massive days of effort for sellers, right? Imagine, for example, you spend 2 whole days building something, and then in a day, your little brother comes and knocks it all down, right? That's a massive setback. I don't know if these analogies are helping, but hopefully sometimes it helps for somebody. Anyway, this is what I like to consider a change of character, right? We got this massive breakdown. And those of you who, have been to some of these lectures before, this looks like a high volume breakdown, right? Plain and simple, this right here alone looks bearish. And if anybody said this doesn't look bearish to me, you are probably lying because you know what happens after. But this, by any convention, is not bullish, right? Rising volume as we break a key support level, that's not a good thing, right? That's not a good thing. However, when we see the context of what has happened after that breakdown, it changes everything, right? It changes everything. This is the first example. Does this make sense? Does this concept of volume and price, volume is effort, price is the result, make sense? And how to understand the discrepancy between the two. All right, let's move on to the next example. Next one is really simple. Draw a line right here, 150, psychological resistance, easy. Suspiciously high volume as we break above 150, well, that's pretty simple, right? This is another anomaly, right? Why do we have this high volume as we're breaking resistance? Well, clearly somebody wants in. And notice the very next day, significant follow through. This is exactly reflected in the idea that I posted on NVIDIA just yesterday, right? Same idea. Same idea here. So this one's simple, right? Anytime we see high volume breaking a key level, you want to be paying attention, right? You certainly want to be paying attention. A good way to trade these types of setups is get long above the prior day's close. That's it. Wait for price to break above the prior day's close, get long. Don't overcomplicate it. Doesn't need to be anything crazy. And that is actually something that I plan on posting in the tab tonight. Look at this right here on Amazon. Price came down, retested some of the moving averages, retested the 9 EMA, or I guess 10 EMA here, held right at it on incredibly suspiciously high volume. Why is there this much volume today? It's weird, right? Something to pay attention to. So this is something I'm going to be watching into tomorrow. Got a little trend line there. This is one of my favorite ideas to get long on into tomorrow. Level to watch is the close, 186. Get long above 186. I'm going to post that idea in my tab. I'm going to trade it tomorrow if it comes to fruition. And well, I don't want to say we're probably going to make money on it, but I'd be surprised if we didn't. Well, if I didn't. Maybe you guys won't follow or won't like it yourself. Anyway, this is the basis of all my ideas, right? It's looking for either an anomaly, right? Weird volume coming in at lows or highs, or some kind of confirmation volume, right? Some kind of continuation as we break out, right? Here, another great example. This is on an earnings report, but still holds the same principles. Massive volume as we have a great earnings report, and this gap stays open. When these sorts of gaps remain open, that is an incredibly, incredibly strong signal, right? Seeing these price action gaps hold open, if you're not bullish, there's definitely no reason to be short, right? If price can't even break back into this gap, there's certainly no reason to be short. And you notice when we come back to visit this gap, who's surprised that the same buyers are still waiting, right? The charts make it very, very obvious. The strongest support and resistance levels always occur where there's high volume associated with them, because fundamentally that high volume is always going to be where the most people are interested, right? The market has already shown us that they are clearly interested in exchanging shares at this 167 area, right? Low of day on the day after earnings. Yeah, you bet somebody's going to be excited to get more shares there. And there's absolutely no coincidence that the first opportunity we came back after we moved away from this level, there was a massive bid off this level, right? Massive buyers off this level. And these patterns are repeated in literally every single stock and every single marketplace, time and time again. And this is really all you need in order to form the basis of a consistent trading strategy. And we're going to talk a little bit more and add some more layers to this. But this is really the big idea of volume price analysis and really price action analysis. And at its core, it removes the need for, I'll call it non-logical thinking, because all we care about is who's buying, who's selling, and what the price is doing, how it's reacting to the people that are buying and selling. That's it. That's all we're thinking about, right? That's all we've done in the past 3 examples is who's in control, right? In this case, it was sellers. Then buyers took over. Buyers break through. They're in control. Buyers were in control. The tide has turned. So any questions on the specific examples we've given so far? Questions, comments, concerns? You don't know why I make it look so simple? Is making it look simple a bad thing? Like, is that confusing you? Because this is really, it doesn't need to be complicated. Okay, good. How do you know where to draw the resistance? Yeah, Padrino, it's an interesting question. It's one that I'm going to answer for you in like 5 minutes, but I have a whole hour-long lecture talking about this. London, that's an excellent question. I hope you stick around for the next 5 minutes. I'm going to answer that next. Okay, so how do you know where to draw resistance, right? Sure, it's a common question. It's something that comes up a lot. First and foremost, it's something that's going to take practice, right? You're going to have to practice. How I like to draw resistance is looking at the larger time frames first and foremost, and finding key pivots, key areas of rejections from the past, and also marking out pivots from the prior trends. So, for example, here we have a couple really notable levels, right, on Amazon just in the past 3 years, right? First thing I'm going to mark is prior all-time highs. You always got to mark out all-time highs. That's always going to be a key level. Then I'm going to mark out all these lower highs here from the prior downtrend, right? All of these are going to be significant pivots in the future. So I'm going to mark out boom, 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 right? That's the big idea. The only other thing I'm going to be looking for is areas of kind of congestion where you see multiple bodies or wicks tagging a specific area, which would be like here for me, right? A bunch of wicks off this 100 area. Maybe even here, we'd have a more intermediate level. Now let's zoom into the daily and see what this looks like. Not too bad, right? So here's our weekly levels. We could probably tune them in a bit. Could make some adjustments. We could add some new levels. I could say I'd probably want to adjust this one a bit, or at least create a new level, maybe right here-ish. Seems important. All right, we got this wick off of it, multiple bodies off that level, bunch of rejections off of here recently. So this 180 level looks significant to me. Obviously, all-time highs remain significant. So that's kind of my thought process there, is there's kind of 3 places that I'm getting levels from. Prior pivots in the trend, here, 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 here. All-time highs, always going to be key here. And areas of congestion. The final tip that I have for drawing support and resistance is the volume profile. And this is one of my favorite excuse me. One of my favorite, I don't even want to call this an indicator because it's really not, but the volume profile essentially displays volume by price. we've been talking about volume by time here on the x-axis, but this is volume by price on the y-axis. This also displays areas of prior congestion, support, resistance, etc., where there's lacks of support and resistance. And it also shows the most important areas on the chart. So for example, this pink line here, this is called the volume point of control. This is the most important area on this chart. So I'd have that marked out. And if we look at that 167.5, any surprises? There shouldn't be. So that's my crash course in drawing levels. Yeah, obviously, it takes practice. 5 minutes of instruction isn't necessarily enough. However, I'm hoping that answers your question. But yeah, awesome. Happy to hear that. All right, London, what's the most common setup to act on with volume and price? Yeah, so let's actually talk through what I'm looking at here on Amazon. So I'm going to talk you through everything that I'm seeing right now. And this is actually one that I just found after the market closed. So taking a look here, everything starts by first identifying what the trend is. And for me, I like to look at the moving averages and the structure of price. Right now, we're looking at the 10 and 20 exponential moving average. When the cloud is green, it's a positive trend. When the cloud is red, it's a negative trend, right? So that's the first step. Number two here is we've gotten a pullback here on low volume. That's a good sign, right? We've gotten no notable volume at the highs. What that means is that there was no significant amounts of sellers as we approach the highs. One thing that would concern me is if, for example, we saw volume that looked like this. And I'm just going to fake it really quick. If we saw volume that looked like this at the highs as price stalled out, what that means is that sellers likely had stepped in here, right? Sellers likely have stepped in at this point. So it's not something that you really want to see. You don't want to see high volume as price rejects a prior level, because what that means is there is a significant amount of sellers present there. So in this case, that is not something that we're seeing. I just faked that. That's what it looks like in reality. So we're not seeing any concerning volume as price pushes the highs. So that's a positive. In addition, we are seeing suspiciously high volume as price comes into support. We're sitting at this 10-20 EMA cloud here. Price is holding up nicely, right? We got a nice, I guess this is considered like a dragonfly, doji, whatever. I don't know, not concerned with the name of this thing. I don't really care. But anyway, prices pulled back into support on declining volume. And as we are starting to hold the support, we're getting increasing volume, right? Indication of buyers. In addition, we got a couple just real clearly defined pivots here. You could draw this trend line down from the highs pretty easily. Easy line to look for a break above to get long, which that's going to be something that I'll be looking for. Also, a really nice pivot today that was formed right around this 186 area, which if we pull up the volume profile, it should be even more clear. Yeah, so right around this 186 area, we got a nice volume shelf, just a nice spot of resistance there, which I'd probably simplify this down to just be looking for a break above today's close, which is 186 right here, right in the center of that zone, with the first target at this point of control, which is where we got this small rejection, 187.5 here. So this would be the first target. Anyway, this isn't necessarily a walkthrough on what this trade idea is going to be, but those are some of the qualities that I look for. This is one of my favorite things to look for, is seeing this high volume on a pullback is really, really nice. And I'll post all the scripts from the section in my tab. Let me just post it now in the chat for you all, but I'll post all of them in the tab now that I know that this is working. So this is definitely not my study. This is one that I took from somebody else a long time ago and just set it up for myself. But here you go. I'll post this in the chat. Go ahead, test that one out. Let me know if it works. I'm hoping it does, but maybe it won't. Yeah, I will also post those in my tab. Hopefully I don't forget. All right. So yeah, this is generally the types of setups that I look for. How do you set it up? I'll show you how I set it up. So this is set up for me with the 10 and 20 EMAs. This is a kind of, I'll call it system from another book that I read, which is, let me show you a graphic that I love to show. It's one that I've posted in my tab with a lot of trade ideas recently. Let me just open up the image really quick. You need the link. Yeah, so This is kind of why I'm using the 10 and 20 in EMAs. This is super vague without too much explanation, but essentially this is kind of like a simplified description of the cycle of price action. I like thinking about price in this way, so that's why I use those EMAs. And it's also really close to the 9 and 21, which I previously used. And 20 EMA is pretty heavily used by Al Brooks, who's a really legendary day trader for the most part. So good amount of justification to use these two moving averages, and I also just am used to it as well. You said how to set up the link. If you have Thinkorswim already installed, there shouldn't be much setup for you. You should pretty much be able to click it, which hopefully, yeah. So when I click it, it just works. So you can pretty much just click View in Thinkorswim, and it should just work. Which I'm actually impressed that this is working now. Cool, awesome. Thank you, Husky. Yeah, and I know I have probably owed other people shared stuff on Thinkorswim for a while, and it hasn't worked. But now that's working, I can actually get stuff to you. So it's a great thing. All right. So this is really what I love to look for most. I mean, if we took a look through my tab, we'd probably find a lot of similar looking ideas here. Let's see. I think Google's one of late that I was looking at. It looked a little bit different. It didn't look quite like this. It got a bit more messy, but essentially we got high volume gap up, which ultimately didn't hold. Declining volume as we pulled back. Nice wick off the moving averages. Essentially, this was a similar idea. It looks a bit different, but same concept there. Let's see. Let's see. If I can find some other good ones. Oh, I think CLSK is a pretty good one. So this is one that we were looking at a long time ago here. So the break above 17. As we are moving off of support, we see increasing volume on the way up. Definitely a bullish sign. Got that EMA cloud flip positive as well. So nice move there. Viral says, how do you identify false breakouts by looking at the EMA crowd? So I'd argue that the paying attention to the EMAs alone won't really help you identify false breakouts. I think one reason to kind of be cautious on breakouts is if the EMAs aren't trending in your direction. So for example, if you're trying to trade a breakout when the EMAs are in a negative trend, I think that's a reason to kind of be more cautious. The probability of a false breakout is higher in that case, but no reason to necessarily think that it's going to like instantly fail. Any other questions on this so far? I know we covered a lot in a quick amount of time. I want to make sure I get everybody's questions handled so everybody can feel ready to start to break into these time frames. Albrecht, so I use a 9, 21, and 50 on the larger time frames. So I use the 10 and 20, which is effectively the 9 and 21. I mean, there's not really any difference. And then I use the 50 simple and the 200 simple as well. I'll also sometimes use the 20, 50, and 200 simple all together like this. This is for kind of larger time frame analysis, typically for me. Yeah, so I use the 50 simple moving average, not the 50 exponential moving average personally. I just generally prefer, kind of my philosophy is that the exponential moving averages are quicker to react to changes in price. And as a result, my philosophy is that they should be used with lower periods. But anyway. Yeah, hopefully that helps. What other questions? I know there's got to be more questions. I want to dedicate the rest of the session to questions if possible. If not, I'll cover more, but I know we kind of busted through a lot really quick. And I want to make sure I got everybody settled before we call it a night, because I really do think this is a super easy system to abide by. I mean, it's pretty simple, right? All you're really looking for is volume backed retests of support or volume backed breakouts. That's pretty much it. There's not much more to it than that. Yeah, I'm not sure about the mastermind, to be honest. I'm not super in the loop on that, and I think yeah, I'm sure we'll be hearing more information about it soon. But yeah, at this point, not super in the loop, so I can't really say, to be honest. I'm not bound to secrecy or anything. I just don't know, but we will find out soon, I'm sure. What else? There's got to be some more questions here. When you take stop outs on swings, do you wait for a daily close below your level, 4 hour or 1 hour close? Yeah, it really depends on how aggressive I want to be with the stop. It depends on my entry and it depends on how aggressive I think I should be. The big idea based on my stop outs is generally speaking, the time frame that you're stopping out based on should all correspond with the time frame that your trade idea is based on. So, for example, if you're trading a setup based on a daily chart, you definitely shouldn't be stopping out based on a 5 minute candle close. Ideally, you shouldn't really be stopping out based on an hour close, but sometimes it's okay if you want to be a bit more aggressive. But certainly, if my trade idea is based if my trade idea is based on the daily chart, there's pretty much no chance I'll be stopping out based on a 5 minute close. Unless I'm doing something crazy. But yeah, for me, if I'm taking a trade on the higher time frames, daily is usually the time frame that my trades are based on. I'm not stopping out without it at minimum an hourly close or an hourly trend flip or something like that. Because that's usually an indication. Usually, I like to have at this point, if my trades don't work pretty soon after I enter them, I'm probably not in at the right time. So I usually like to be a bit more aggressive. Do I use SMAs during scalping or day trading? So the answer to that question is no, I don't use any SMAs. I only use EMAs, at least for my intraday charts. So what I'm looking at here, you can see kind of an example. So I have the 10 and 20 EMAs here. And then I have the hourly 20 EMA here with these gray dashed lines. And then these other gray dashed lines, this is just as the prior day's close. So that's pretty much it. And then on the 30-minute here, I'll cycle this between 30-minute and 1 hour in the other time frames as needed. And this is just the 10 and 20 EMAs. How do you add the hourly 20? That's another script that I have, which I'll share. I can find it. Multi-time frame moving average. There you go. I'm going to need to post all of these in the tab before we end tonight. I'm actually going to start getting this message ready for everybody. Before I forget everything that we posted. So that's the multi-time frame moving average. This is the EMA cloud. And then this is the high volume. I'm really stoked that all these shares are working. All right, I got all those ready. So I'll post these all in the tab if you weren't able to get them in the lecture. Hopefully that works. But yeah, that's how to add the hourly 20. Essentially, the way it's set up, I'll show you here. You go into studies, edit, multi-time. Wait, 29? Oh, that's weird. That's funny. Is that really? Wow. I just had to remake this study set for this new computer. That's really funny. Okay. Anyway, yeah, hourly 20. That's what you're looking for there. Can't believe I had it on the 29. That's really funny. Am I good at watching level twos in time and sales? Good enough, but it's not my kind of primary method of analyzing the markets. So I like to watch the time and sales on the SPY and the Qs just for large prints, just to note down those levels. But for the most part, I don't really watch time and sales too often. But I know I generally have an idea on what needs to be looked for, but I'm not one of those people who could just trade strictly off the time and sales and level twos. I'm definitely not that advanced. And I also don't, I mean, I guess maybe one day it'd be useful to be that advanced, but for now. Albrooks, when the selling gets aggressive and you start going more red than you originally planned on, do you immediately market sell or do you have a hard stop limit by percentage? Yeah, good question, Albrooks. Essentially, if I'm going more red than I originally planned on, that means that I'm holding past whatever my stop loss was, which probably means that I already should have stopped out. So I'm late to the party in terms of getting out. So really, for the most part, you should never be going more red than you had originally planned because that means you're not stopping out where you're supposed to. But if I did get in that situation where I did start going red, then more than I had originally planned on, I do my best to think critically about the situation rather than just slapping the market sell. So ideally, I'd still use a limit to get out. and evaluate the situation from there. But yeah, market sells generally, at least market orders as a whole, I try my best to stay away from unless I'm really urgently trying to get in or get out, which for the most part, the way I trade, there's never really a reason to be that urgent in entering and exiting a position. Yeah, there's just really never a good reason to be that rushed in getting in or getting out of something. So, yeah, that's my answer there. How much delta do I typically buy and how much time? Yeah, the delta that I typically get on the contracts that I pick is generally, it's kind of a wider range, I guess. But generally speaking, I think the average delta I get is probably somewhere around 0.35. But the wider range of contracts that I usually select from are somewhere between zero point 0.2 and zero point 0.5, I'd say. Um, Usually I'm picking contracts that are reasonably close to the money, so never anything that's more than 10% out of the money. And I almost never buy weeklies. So, for example, if I'm going to trade Amazon tomorrow, which I'm going to try to, I won't be purchasing weeklies on that one. It'll be next week's. So that's generally the rules that I have. Yeah, I don't always necessarily specifically look at the delta that I'm getting based on the contract that I'm choosing, but as a rule of, or I guess as just a general reference based on what I'm aware of that I trade, yeah, it's usually around, I'll say 0.2 to 0.5. That's a wide range, but I'd say the average is smack dab in the middle there, around 0.35. For some reason, on my Thinkorswim, it said error when you try the EMAs in high volume too. You have it on a MacBook Air. That's weird, Rudy. Maybe send me a screenshot of how it's set up and we'll try to work through it with you. What do I look for when watching time and sales and level twos? What's most important? Yeah. So for the time and sales, as you can see, I have it filtered to greater than or equal to 5K. So for time and sales, for me, the only thing that's important is large orders. I just want to see repeated hits at a specific price level of size. That's most interesting to me. Level twos, if you're watching the kind of live flow come in there, generally speaking, what you want to see is large blocks of orders coming in at any specific level. And you want to see how the tape reacts to those orders as we approach that level. So, for example, as we come into any significant level where there's a large block of cells on the level twos, if you see that number of cells, that quantity of on the bid side rapidly decrease, essentially what that means is there's a lot of people marketing in, which means aggressive buyers at that point. So those are the sorts of things that you want to look for. Again, it's not something that I'm watching every day, but if you were watching the level twos, you'd want to be watching that number. You want to see number one, large orders on either side, so just above the average size orders on either the bid side or the ask side. And then the second thing I'd like to pay attention to is as we approach a key level, I'd like to pay attention to the number of orders that show up on the level twos there, and also the rate of how quickly we melt through those orders as we approach that level, or as we trade around that level, essentially. Because again, as we see the number of bids or number of asks rapidly decrease as we approach a level, usually that means that there's people market ordering, which signals aggression. So cool. Everybody feeling good? We're going to talk. I'm going to get this trade idea on Amazon out tonight. So hopefully we'll have a good example for us, a nice winner tomorrow, but never know. So might not work out, but definitely the signs are there for a nice one. So we'll see how it plays out. It'll definitely be a good example to follow after this lecture. All right, everybody. Well, I appreciate your time tonight. Thanks for bearing with me these past couple weeks as I've been sick and everything and trying to deal with all that. But anyway, we're good to go now. And yeah, thanks for putting up with the technical difficulties. I got to figure out what's going on here. But yeah, appreciate your time as always. And I hope you guys have a great rest of your night. And we'll talk to you soon. I'll post all those studies in my tab. And I'll also share a couple more if I can. I know a lot of people have been asking for specific stuff. So I'll see what I can share. Yeah, maybe I'll just share like the whole workspace or something. So you just have access to it all. And you can go from there. Cool. All right. Thanks again for your time, everybody. Appreciate it. And I will see you all in the next one. Adios.